All right. Good morning, everyone. Welcome to this week's Marketcast call. Hope everybody's doing well. Hope everybody had a great weekend. All that kind of stuff. And if you get a second, just let me know you can hear me and you can see the trading screen up there. Give everybody a moment to get on board. And good morning to you as well. All right. Well, give everybody enough time here. Had a few interesting developments last week. Oops. My trend lines didn't hold. Through that little area. Yeah, it's stuck up there, but no, yeah. So I got that, but kind of got what looked like a kind of like a false breakout there. Seemed like we were on our way to the moon. Pulled back on Thursday. Kind of makes sense, right? All right, cool. We did it. Now we're gonna pull back real quick and up we go. But that is certainly not what happened on Friday. And nothing about that looks like something that's done selling off. Flip side of that is we've had a lot of scenarios like that unfold recently that does make it a little bit difficult to trust. Um, so you go back to like even here, right? Definitely looked like we were going lower and basically didn't. All we did was hop back up the next day, right? Got to start being careful with these Fridays, by the way. These Fridays are coming back to bite us. I think I read somewhere that so far, if you just took Fridays this year, and annualized it, we're running around down 87% in the market. So, but back here basically didn't really go that much lower. Back here, similar looking day. Back here, similar looking day. Back here looked terrible. So we've had these kind of really nasty looking days here before. But you got to stay consistent. So this looks like something moving lower still. I was monitoring this short-term trend line. We broke it. The failure to kind of hold that break certainly is not a thrill. Um, Dow, we do have a non-confirmation here where the Dow did not confirm the S&P's highs. Right, so many meaningful sell-off has been marked by a non-confirmation between S&P Dow type thing. So got a few things to be worried about. S&P, we talked about the potential of the larger momentum divergence. And so we talked about this at the end of last week. And we'll see how this week goes, but right. So, the last time we called for a major, you know, a correction basically was back here 2021 going into 2022. Uh, anytime we see these negative divergences or positive for that matter, we'll talk about a positive one here on bonds, the TLT, which is another piece of the puzzle. What are yields going to do? What do they look like they're doing? And it sure looks like they have put in a high that's going to stand for at least a little while. But when we have weekly or monthly divergences, those are the ones we tend to really pay attention to. This is monthly, right? And so if you look at the previous four occurrences, the S&P had dropped 50, 50, 20, and 20 basically. So when we put in the fifth one, our view was probably falling somewhere between 20 and 50. And I think we got what, 30 something or whatever, 30, whatever it was. So, and now you look and you kind of see our final highs here. And if February does continue to push lower, we're going to see a lower peak put in than the peak prior. And so it's been pretty reliable. So I'd be thinking definitely watching for correction if we do end up holding that move. And we talked about a lot of other things to start the year. For example, as a matter of fact, I think I still have that chart up from when I talked about it last week. Let me see. Yeah, I did. So see if I can pull that up here. Let's see. Nope, not that. Where'd you go? Let's see. Oh boy. Well, that's not what I meant to do. Let's try this again. All right, everybody remember this one? I've showed different versions of this, but this was one of the charts I had showed at the beginning of the year and end of last year. Matter of fact, I think we showed it at the end of last year. And just wanted to show everybody, again, at the beginning of this year, this was one of the charts that we thought was worth noting as far as what we expect to happen, potentially happen this year. And, that conventional wisdom is, cutting rates and so forth and so on is good for the market. Historically, that has not been the case. And if you think about it, it kind of makes sense too. Like, why are we cutting rates? It's generally not because, necessarily good things. So, as you can see, there has, um, historically been a lag, right? So rates get cut, and then it's almost like a ticking little bomb there, or something goes off. Well, thought this was kind of worth bringing back up again, because in other words, again, if history holds true again, then you know, uh, as yields decline, the market tends to struggle or has tended to struggle, right? So, with that being said, now let's go back to let's see where we were, and let's talk about TLT, right? So I think we were talking about this at the beginning of last week. So let's kind of recap it here. Here is the monthly, and it's kind of hard to see because my little lines are showing weekly momentum divergences, but you can see here, right, with your trough on the RSI corresponds with that low. TLT bonds, right, 20-year bonds here, hitting a lower low in price, much higher trough in momentum, right? So this is the opposite, the inverse of what we just saw, right? This is a positive momentum divergence on a monthly scale, the only one that's ever formed here on the TLT. So certainly implies that a very meaningful low has likely been put in by the TLT. Well, what we'd like to see is that price confirmation that we always look for. And sure enough, on Friday, you can see bonds taking out this channel resistance, which No different than back here. Once we took it out, bonds went on a pretty good little run. Okay, and there was a weekly momentum divergence and even a daily, right? Look at the daily momentum divergence here, right? So kind of see right there versus price going lower, right? So I just don't put as much into the daily, you know, as I would in the weekly and the monthly, right? The bigger the scale, harder to form, so they're rare, tend to be more reliable. Daily's pretty reliable too, but unless if we're going to make some major calls, I kind of want to see the weekly and the monthly. So anyway, but once we broke out of this down channel, TLT went on a nice little run, and here we are doing it again. This time against the backdrop of that monthly momentum divergence. So if bonds are putting in a major low, or if they have put in a major low, then that would tell us that yields seem to have put in a pretty good high, you know. And so if yields are dropping, as history just seems to show us, we might expect that the market might be getting ready to struggle. And remember, there's other environments and indicators we've looked at. Okay, the market's very overvalued, historically overvalued by some measures, more overvalued than it's ever been by some. We've talked about how top heavy the market has been, is, so forth and so on, and a lot of reasons to think that it's possible. Right, coming back to the S&P, it's possible that we saw a meaningful high put in last week. So now, keep in mind, the things that we just walked through, they don't mean that the S&P the market couldn't go on to hit another high, and those things still are intact, right? When you look at monthly divergences, it takes a lot to form them. It takes a lot to undo them too. So we could easily run back up here, next days or weeks or whatever, and it wouldn't change anything we just walked through by itself, right? But we talked about this 2 months ago when, the beginning of the year, and for others, we talked about the end of last year that the environment was right for a sell-off. So what would we be watching for, right? Well, again, it's that price confirmation. This is what we always want to see. We talk about an environment being right, you know, and then we want price to kind of confirm that. For us, we'll be watching this pretty nicely defined channel, I would say, on the S&P, right? So the resistance side tested, 3 or 4 times. You got support down here. I'd be curious to see what happens if and when we get down here, because we will at some point get down to this support, if not now, sometime, and see if we test it again and get some sort of a bounce. It'd be great to see that, because it'd be just and yet another confirmation that the market is in fact paying attention to that little pink line. Right now getting closer and closer to 5,900, but we're seeing a lot, right? Seeing a lot of things come together, and as they say, a topping process is exactly that. It's a process. So we'll see where things take us. But the bottom line is, whether it be short term, whether we pan out here to the larger picture, everything seems to point towards we should be expecting lower prices. We should expect this high to hold in all likelihood, right? So pre-market futures aren't doing a whole lot, up a little bit, not a big shocker, after falling from 22 and a half all the way down to 21 and change here. So uh, pretty good fall. So if we rally a little bit, that's fine too. Um, but I'd be looking at those as opportunities to potentially get short, right? Hey, good morning to you guys as well. So any questions on all that? The market to breakdown. And like I said, we'll be looking for short plays more than anything. Thought Tesla looked like it rolled back over. I don't know if there's some news last hour or something, but this thing shot up. As you can see, pretty hefty little run up there. I don't know, my guess is there's some news of some kind. But otherwise, One stock we were watching last week that also broke down. Problem is they have earnings this week, I believe, is Kava. Now, sometimes, the market can tip its hand a little bit. What it plans on doing on a news event. We talk about that all the time with FOMCs, right? That market's pretty good about it. I don't know if it's as reliable when we look at individual names, but the problem is there's not a whole lot we can do with something like this, knowing that it has earnings coming out. It can be a pricey play, but if you're going to pick a play, you probably want to, let's see here. You can always check and see if there's any sympathy plays. I don't know what Kava does. Try to stay away from that kind of stuff. But let's see. Let's see if maybe we can find one. Something that would be less expensive to do. Here we go. Let's go this. All right, so let's see. What does this guy do? Where's the oh, here we go. Oh, that's a restaurant? Okay. So I'd rather not. But thank you. All right, so narrow down restaurants. Thank you. So there's Kava Group. Shake Shack. Chanson International Holding. What in the world? Change our price real quick. Let's go over $10. That gets rid of some of them. All right. And let's just get rid of anything. Yeah. All right. So now we're down to 9. So we can take a look at some of these. Chipotle already had its earnings. That's Starbucks, Wendy's, Sweet Green. I don't know if I've ever looked at Sweet Green. Okay, let's take a look at Bros. Bros just had its earnings. Okay, so let's look at Bros and CMG. We'll take a look at those. So let's go. I want to I don't remember it making me switch windows like that. Okay. All right, so there's Bros. What's up, bro? Oh, CMG. So let's see. Kava's last earnings was here, 11/13. So it's right here. I mean, probably was affected. It looks like a little bit, like similar move. Opened up high and sold off. Very similar, but wasn't like a major. Bros was, where's the 13th? not affected at all. So I don't know. It doesn't really look like there's much of a sympathy play to be had. And this thing did move a bit, right? 172-ish, 25 plus dollar move that day. Here's the other one before. So this can move, but 823. Let's see if Chipotle moved on that one. Where is it? Not really. So, yeah, I don't know if there's much to be had there, folks. Not much, doesn't look like. So, but yeah, I mean, if you were going to play it, I'd probably want to be looking at a bearish play of some kind. Anyway, all right. What else were we looking at last week? Ooh, it was a bit of surprise. Really like this turnaround here, and it did not care. So, as I said, Tesla didn't look good, but it's gotten some sort of pop in the pre-market. It looked like this had rolled right back over. Kept trying to take that old 360 back and couldn't do it. Gave it one good gusto back on Wednesday. Looked like it had finally pushed through, and maybe we're going to get up to this trend line, and that is not what happened. Curious here. Hold on a second. Nope, not exactly. We'll put that here just in case, but let's go. Switch that up a little bit. I don't know, a whole bunch of lines. So we'll see if this channel does anything if we ever get down there. But this seems like the most obvious target here, this old breakout point. So, but like I said, something looks like something juiced it here last hour. So, what else were we watching? Palantir got hit pretty nasty last week. Again, it had a pretty nice looking reversal on Thursday. Pan this out to a weekly, and that does not look good. It's not a great look. And momentum waning there as well. That's on the bigger weekly. So this thing might be, ready to call it a wrap. I would say if it failed to hold that 100, that should mean more downside is coming. I know Hims has earnings. It's been a big name, obviously. I think they have earnings today. Nasty little drop on Friday. So it's not one of the hot names, this and Palantir. Who else were we watching last week? Metagate back. Netflix coming down to thousands. So it's clearly, I think we probably know that's an important mark, just any stock regardless, but I like it more when I can see it, right? So 1,000 resistance there, back up, hit resistance again, finally broke out of it, came back right off of it, and then the low of the day on Friday is 1,000 as well. So kind of a line in the sand for that guy. If that fails to hold, then you got to be thinking back down here to this low, right? The gap low, the 950 mark. So worth a watch there. We were actually in those puts and kept waiting and waiting and waiting all day on Friday. And then finally, once we close our puts, uh, you know, then it makes the little flush down to 1,000, of course. So it's almost as if the market was waiting for us to exit. Home Depot broke down. That was another one we kind of looked at. Right, took out the 400 mark. Seemed like this is where it was coming next. So I would think 380 is coming, right? And then you fail to hold that 380. Pretty big looking head and shoulders there on Home Depot. Kind of mirrors a lot of home indexes right now. So a lot of Home Depot's in a lot of that stuff. The construction and the builders and suppliers and such. So this looks like a textbook, right? So you take out 380 on the downside. It's another one of the concerns we've seen a lot lately when it comes to overall market is housing is commonly a leading indicator, and housing has been struggling here for a while. And if you go back to the financial crisis, that was like a 2-year lead time where housing prices peaked, but then, market kept going for a while, but eventually, you know, market followed housing. So if you see Home Depot taking out 380, that implies one heck of a fall, and that implies pretty much testing your 52-week low. So, but if you kind of pan out on Home Depot, you can do it. They can help. It's been on a pretty good run, So coming back down to this area wouldn't be a big shocker. Almost looks like not quite, but almost. Man, it looks like this is looks pretty good. It's not gonna be your warning shot. Do there. This out of the way. So there you go. There's your kind of your framework for Home Depot. So if you take out 380, you've taken out your trend line, and I don't think that's what that would be. Yeah, not quite. Darn it, not that. I was gonna do that though. Do there. Let's try that again. Let's go. Let's not do red. Let's do this. There you go. There you go. So watch that area. All right. What else we got? TDD, DRI, diamonds. It's the Dow. It's the market. We just looked at it, so it wouldn't be anything new there. DRI. Let's see. Home Depot and Lowe's have earnings this week. Well, that could give us the breakdown. Darden. Pretty good hold through there. In that area. So I'd be watching there. I feel like this used to be in our watch list a long time ago. Maybe I'm wrong. Yeah, it doesn't really look like a sympathy play though. If you kind of look at it, didn't do anything. Back on the if anything, it looks like it did the opposite of what Kava did. So yeah, I don't know if that's going to work. Really doesn't look like there's any real true sympathy play. We just kind of looked at a couple there. It doesn't really look like there's a good one to be had. But all right, so Home Depot TDD. We looked at that. Let's see, what, 2 weeks ago, I think. Yeah, like a breakdown here. I wonder where that 75 level comes from. Looks like it was something from a long time ago. Looks like the real level was up there. You don't say. Looks like right here, really, was where the breakdown was. Somewhere right there. Now you get back in this area. Kind of a mess. I mean, I'd be thinking you got to at least be coming here to this low. So that looks like a good put play. But all right, like I said, we should be opening. Looks like a little higher. Yep. And I would think there'd be an opportunity to get short. TLT, like I said, looks like a good opportunity to get long on bonds. Um, so we'll probably, I know we're already in that smart trades, but we're going to get into that into the LTS mentoring program where I look at that. Maybe get into a similar trade, the smart trades with that one. But right, other than that, yeah, I'd be looking for lower, folks. Until unless the market shows us something that changes it, you gotta be thinking lower. But no matter what, we'll be back next week to recap everything that was. So good luck in the trading this week, everybody.